So most of the students have already joined. First of all, please confirm that you can hear me and you can see the screen. Okay, thank you very much. So apparently we don't have any technical issues. Let's start right away with attendance. Abdulaziz, Abdul Hamid, Abdallah, Al Safur. Abdulaziz, thank you. Abdul Hamid. Abdallah is here. Abdul Hamid, no. Okay. Abdul Rahman, Ahmad, Al Anud. Abdul Rahman, Ahmad Dashti, Al Anud, Al Ajmi. Abdul Rahman is here. Ahmad is here. Al Anud. Not yet, maybe. Okay, thank you. Al Hawra, Ali Abu Talib, Ali Al Kharif. Ali Abu Talib, okay. Al Hawra, thank you. Ali Al Kharif, yes, thank you. Ali Shishtari, Alia Amira. Okay, Shishtari, Alia Amira. Amira, thank you. Alia, yes. Akmar, Arwa, Azwa. Akmar, thank you. Azwa and Arwa, yes. Bader, Dana, Dua. Bader Al Mula, Dana and Dua. Dua is here, thank you. Dana, yes. Bader, not yet. Fahad, Farah. Okay, Farah, thank you. Fahad. Fahad was here, right? Fahad, okay, good. Fatma, Al-Haza, Fatma Al-Kafif. It's okay, Fahad. Fatma Al-Kafif, Fatma Al-Haza. No. Fatma Haidar, Gadir. Okay, both, thank you. Hamad, Al-Saraye, Al-Tarkit, Al-Moinea. Al-Saraye, Al-Tarkit, Al-Moinea. Okay, both, all three of them, thank you. Hawra Juma, Haya Al-Mutairi. Thank you, Hawra. Haya Al-Mutairi. Haya Al-Blan. Okay, Al-Mutairi, no. Okay. Hessa, Huda, Husa. Hessa, thank you. Husa, thank you. Huda, not yet. Khaled, Latifa, Marzuka. Marzuka, thank you. Khaled, thank you. Latifa Al-Mula. Okay. Meshal, Madawi, Mohammed. Meshal, thank you. Madawi, thank you. Mohammed Marzuki. Thank you. Mohammed Al-Humaide, Mohammed Ashkanani, Moruj. Al-Humaide, Ashkanani, Moruj is here. Ashkanani, no. Okay. Munira, Noor, Rawan. Munira, Rawan. Wait, yes, Rawan and Noor Al-Sanaya. Good. Rima Al-Shamari, Rima Al-Awadi, Rukaya. Thank you, and thank you. Salem, both Salem and Sarah. Salem Al-Haris, Sarah Al-Ajmi, Salem Al-Hukal. No. Saud Shahad Yassin. Shahad Yassin and Saud, right? Thank you. Okay, now I will call again one more time those who didn't answer. Abdul Hamid Al Katan. Okay, no worries, Mohammed. We will change it. Abdul Hamid is here. Alanud Al Ajmi. Alanud? No. Badir Al Mula. No. Fatma Al Haza. No. Haya Al Mutairi. Okay, Haya is not here. Huda. Huda Lenezi. No. Latif Al Mula. No. Mohammed Ashkanani is here. Okay. Yes. And Salem Al Hukal. Salem Al Hukal. No. Okay, guys. Listen. There is an update on attendance. Actually, for some reason, I misunderstood the rules. From now on, if you miss the first calling when I take attendance, and let's say I start class, I start the lecture, it's your responsibility to let me know, but you will not type in the public chat here because it's impossible for me to follow. If you noticed me, if you announce here, it is difficult for me to notice you. So if you come late, meaning after I finish with attendance, you have to let me know of your presence in private chat so I can see it clearly different from the other student. And this should happen before 20 minutes. If you come after 20 minutes, even though you might let me know of your presence, you will still be absent. So there will not be any lates anymore. So no lates. So after 20 minutes, it will be absent. Okay, guys? So that we are clear, it's AUM policy. It's not, actually, I should have followed this from the beginning, but I understood it differently. Okay, good. Thank you. Now, I will ask you one thing about. I think we finished the exercise from chapter 5 with the statement of financial position. But anyway, I will show you, and I just want a confirmation from you. Okay, I remember that we finished it. Just a second, actually. Okay, before we even start with the lecture, I received many emails requiring feedback on in-class assignment, which is fine. Okay, it's your right to know, but I am not responding each of you individually. I will put the feedback on Moodle. So when I put the feedback on Moodle, I will send you a message so you can go on Moodle to look at your feedback. Okay, so each one will have individual feedback, but it will be on Moodle, not by email. Okay, understood? But I have to prepare it in a specific way and upload it, which is not easy, and I'm looking at ways how to do it. This is why it's taking some time, but I believe today afternoon I will put it on Moodle. Okay, thank you for understanding. Now let me just show you one exercise that we did, but I need your confirmation because with one section I couldn't finish and with one section I finished. I think we finished together, okay, in this section. Just I will show you and you will confirm with me if you remember from last class. Huda, yes, I took attendance. please send me a private message and I will change your attendance, okay? From now on, if you come late, send a private message, please. Okay. Abdulaziz, yes, what would you like to talk about the upcoming assignment? It will be next week. I will post it today, okay? But your days will start counting from Sunday. No, it will be okay. Let me count. It will not be due Tuesday. It will be 1, 2, 3, 4, 5. It will be due Wednesday. Okay, thank you, Abdulaziz. So you confirm? Yeah, good. So the due date will be Wednesday. Uh, then late submission will be after your winter break, but I don't believe you will submit late because it comes with heavy penalty. Now you confirm that this exercise we finished, right? All of it? Good. Then this is all about the first. Yes, I remember the same. Just I wanted the final confirmation. Now, actually, we have finished with the first part of chapter 5, which was about the statement of financial position. Okay? Now, we will continue with chapter 5, but the second part of it, which is about statement of cash flows. Now, before starting with that, let me tell you that the upcoming assignment will be on chapter 5, first part. So what we finished already. This, what you see here on the screen, the statement of financial position. Now, the questions might be matching, multiple choice, or preparation of a statement like you see here, but of course a bit let's say easier, not with so many items. Okay, so it will cover, yes, I think the slides are already there. Let me check. The slides should be already there. Yeah, the slides are there. I will show you now. Okay, just let me show you for everyone. Okay, you see here um, chapter 5 part 1, statement of financial position. If you want some exercise, some solved exercise, let me know. But I believe that during class you took pictures, so Rawan, you mean today's slides? Yes, I will put them after we finish. Okay, but for the upcoming assignment, you need only the first part. Okay, good. Now, we will start right now with the second part of the chapter. Okay, just a second. This is not the second part. For some reason, I have named it incorrectly. Let me check. No. Okay. Somehow I named the second part this, but the information inside is from the first part. Okay, just give me 1 second. I have it somewhere else. Okay, now good. So you can see on your screen now, chapter 5, part 2. Okay, it is about statement of cash flows. Okay, now we have 4 learning objectives for this chapter. The first one is indicate the purpose of the statement of cash flows. Indicate the purpose of the statement of cash flows. This is theoretical. If you have a question like this, you have to explain why do we need a statement of cash flows? What information does it provide? Okay, why is it useful and things like this. In the second one, identify the content of the statement of cash flows. The same thing we did for income statement and for statement of financial position. What items, what elements do we report there? Do we report any assets, liabilities, equity, revenues, expenses, and how do we report it? Is there any specific format or not? Learning objective number 3, which is the most important one in this lecture, is prepare a basic statement of cash flows. So in this learning objective, we will actually learn how to prepare a statement. This is your first time you see a statement of cash flows and how it is prepared. So it will be a little bit challenging, but it is a beautiful, interesting statement. And finally, understand the usefulness of the statement of cash flows. So what can we use this statement for? We will see, depending on time, we will see a couple of ratios here. Okay? Now, when it comes to theoretical learning objectives, I will go a bit fast and I encourage you to read more on them because I want to focus more on the third one, preparation of a statement of cash flows. Okay? So here you have learning objective number 1. You have a definition of income of a statement of cash flows. And what is the primary purpose? The primary purpose is to provide relevant information about cash receipts and cash payments of an enterprise during a period. So this is a simple statement when it comes to the purpose. Okay, it's not simple when it comes to preparing it, but the purpose is very simple. The objective is very simple. We want to let users know how much cash was received and how much cash was paid. Okay, cash coming in and cash going out during a particular period. For example, during 1 month or during 1 year. This will depend on the accounting period of the company. Cash flow statement provides answers to the following questions. Where did the cash come from? So, yes, Abdulaziz, it only concerns cash. Okay? Cash and only cash, nothing else. But of course, in order to compute cash flows correctly, we have to rely on other things, but we will see about that. So, not only do we need to compute how much cash was received, but we should also tell where did it come from. Also, what was cash used for? Okay, first we have to compute how much cash was used or spent or paid. but also we have to explain why was it used for. Okay, why did we pay this cash? What was the reason? And finally, if you combine the first two, so if you know how much cash was received and how much cash was paid, we can calculate what was the change in cash, in the cash balance. So was there any increase or any decrease in cash from the beginning to the end of the period? Now, for learning objective number 2, we have to identify the content of the statement of cash flows. Actually, the content, more or less, we explained, we mentioned. So what is the content? The content is cash. We report only cash. So we don't report assets in general. We don't report liabilities, equity, and other elements that we are used to report in other statements. Here we report only one specific element of assets, which is cash. Okay? But how do we report it? We report it separated into 3 different categories, or classified into 3 different categories. This is important. I want you to take note here. We report cash or cash flows from operating activities. Okay, so this is one classification. Some cash flows arise from operating activities. And when we say cash flows, it may be inflows or outflows, okay? Or a combination of them. The second category is cash flows from investing activities. Again, inflows and outflows. It may be plus or minus, or both. And the third category is financing activities. Okay? Now, on the right side here, on the right top corner, you see a very simplified format of the statement of cash flows. Let me zoom in. Okay, you see here? The statement of cash flows follows these steps. First, we report cash flows from operating activities. Now, this is not just a line, just a number. It is more of a section. So you can think of this as a section where we report different items, but the final result is net cash coming from operating activities. We will see about that, Abdulaziz. Now I'm just explaining the concept, okay? But then we will see an example. I have to warn you that it's not that easy, but once you get the hang of it, it's beautiful, it's nice, it's interesting, if you ask me. The second section is cash flows from investing activities. Again, this is a section where we report different items. And the third one is financing activities. When you are done calculating cash flows from all these 3 activities, then you combine this, you add them. For example, in this case, I have some numbers. These are just made up numbers. 1000 minus 600 plus 200 equals 600. This represents the net increase or decrease in cash during the period. Okay? Next, we want to reconcile what we computed. We want to make sure that this is correct by adding cash that we already had at the beginning of the year. Suppose we had $100. And if you add the increase in cash during the period, then you should have $700 at the end of the year. And this number we check against cash that we have reported on the financial position statement at the end of the year. Again, if you don't understand what I'm saying here, at least everything, don't worry, we will repeat them many times and I will show you with examples, okay? This is just a starter, a primer, let's say. Now, below here we have an explanation of all three activities: operating activity, investing activity, financing activity. This is important to understand because in the end, the difficulty when we prepare the statement of cash flows comes down to differentiating between these three activities. Okay, so the common mistakes are sometimes students include transactions in the wrong section. Okay, so we have to really understand what do we mean by operating activity, investing, and financing. So let's start by explaining them. Operating activity is the normal, daily, frequent activity or frequent transactions that a company does. Basically, it's the reason why the company exists. Okay? For example, suppose that I'm a restaurant. What is the reason I exist? What is my mission? My mission is to prepare good meals, delicious meals, and serve them to my customers. Okay? Now, everything I do with this purpose in mind is operating activity. For example, what do I need to do? Every day I buy food, right? I buy vegetables, I buy meat, dairy products, different products that I need for cooking. And of course, I prepare them, I cook them, and I serve them. So, cash that is used to buy these supplies belongs to operating activities. Cash that is used for electricity, for example, for gas, because we use the ovens, okay, is an operating activity. Salaries of my employees, uh, not only waiters but cooks also, etc. These are all operating activities. Okay. Now this is generally speaking. Yes, normal activities which usually occur frequently, all the time, day by day, year by year, and so on. Okay. Now, another way to distinguish operating activities is the following. All, or let's say most of the transactions, transactions that enter into the determination of net income are operating activities. Okay, most of the transactions that enter into the determination of net income are operating activities. In other words, most of the items that you find in an income statement belong to the operating activities. Now, why I am saying most? Why not all of them? Because there are some exceptions, a few specific items that are still in income statement but are not part of operating activities. Okay, some examples of operating activities would be sales, service revenues, cost of goods sold, other types of expenses that we include in income statement, purchase of supplies, purchase of inventory, and many others. Okay. Usually, operating activities affect net income and current assets and current liabilities. This will be needed when it comes to, let me again zoom out because maybe it's difficult for you to see. Now, here, this information we will use when we start actually preparing the statement. I will repeat it again, don't worry. Now, I can tell you that operating activity is the biggest category. Most of the transactions belong to this category. When it comes to investing activity, this category includes making and collecting loans. Careful, do not confuse it with taking a loan. Okay, here we are talking about giving a loan. When you give a loan, when you lend money to others, this is an investing activity. Acquiring and disposing of investments, okay, purchasing and selling of investments in the stock market, for example, like shares, bonds, acquiring and disposing of property, plant, and equipment. Now, what do you notice here? All these items, loans that you give to others, investments in the stock market, plants, property, and equipment, all of these are non-current assets. So, if there is any transaction involving a non-current asset, most probably it's an investing activity. If you buy and sell non-current assets, it's an investing activity. Okay? So this is why here it says it affects non-current assets. And finally, we have financing activities. Financing activities involve or include transactions involving liability and equity items. Okay? So transactions that increase or decrease liabilities and equity usually are financing activities. Some examples would be issuance of shares, issuance of bonds. Taking a loan also would be a financing activity. So in other words, with these transactions, the company raises funds, acquires funds that then it uses for investments and for operations, daily operations. Financing activities affect non-current liabilities and equity items. Okay, so what I have highlighted in red here is important. I want you to take note or to take a snapshot or a picture, because we will refer to this when we start preparing the statement. Okay, now in learning objective 3, we have to basically prepare a statement of cash flows. In the slides, everything is explained in steps, but I will not rely on the slides. I want you to illustrate it by an example. Okay, so let's find an example here. Okay, let me find an example for you. Okay, I will use this example, exercise 514. Okay, but I will need to switch to Excel, so just give me a second. I will make a snapshot of the exercise. I will copy paste to Excel and we will work on that in Excel. Okay, I believe we are ready. Okay, good. Now you can see on my screen the exercise here. Okay, first of all, the exercise is this one. Sorry. So first of all, what do we need to prepare a statement of cash flows? You can take some note here, even though this information is found on the slides also. So what information is needed? Okay. Now we need three things. One, comparative statement of financial position. Now, statement of financial position, you already know, right? Of course, I'm just asking to confirm it. Uh, but what about comparative statement of financial position? What is a comparative statement of financial position? It is, or it has to do with comparison. If you see here, this is a comparative statement of financial position. When you have data from 2 consecutive years, 2 years, one after the other, like we have here, we have 2018, 2019. This is what we call comparative statement of financial position. Why do we need this? Because it allows us to see the changes for all items, for all assets, liabilities, and equity. We can calculate the increase or decrease, like you have in the last column here, increase or decrease. Okay? Do we understand this? Okay, so this is very important. You cannot prepare a statement of cash flows unless you have this. But this is not enough. You need more. We need income statement. Okay? Income statement. Income statement for the current year. For example, here, when it comes to statement of financial position, we have 2018 and 2019. But when it comes to income statement, we need only 2019, not comparative. Or, if you don't have full income statement, at least you need net income, which is the result, the final number in income statement. And lastly, we need select transaction data. Okay, some extra information on particular transactions that is not found in the statements itself. And I will explain what do we mean by this. Now let's read the exercise really quickly. The comparative statements of financial position of Lopez Incorporated at the beginning and at the end of the year appear as follows. Now this one is the comparative statement of financial position. Below we have net income of 34,000 was reported. So I told you that we need net income, and we have net income. And dividends of 13,000 were paid. This is what I meant by select transaction data. Dividends of 13,000 were paid in 2019. Also, additional information is the following. New equipment was purchased and none was sold. Okay, so basically we have all three sources of information, and we can start preparation of the income statement. Now, I have copied the same information on a different worksheet because I can work on these numbers. The first one is just a picture. I cannot work on a picture. Okay. Now, in this particular case, we have a third column where the difference between the 2 years is calculated. But you should not expect it to have it ready like this. So I will erase it, and I will show you how to calculate the difference between the two years. Let me copy also the additional information that we had, and we are ready to start. Okay, so net income is 34,000. Okay, dividends are 13,000. And also no new equipment was purchased, but none was sold. Good. Now, let's start on the right side here with statement of cash flows. Remember, yes, Abdulaziz, basically, yes, you have to calculate the difference always. Now, first of all, let's prepare the format, and then we will populate the statement with items and numbers. So what was the format? You remember? We had three sections, one for operating activity, okay, one for investing activity, and another one for financing activity. After that, we calculate net income, not net income, net cash for the period. Cash for the period. We add cash beginning balance, and we should get cash ending balance. Okay, so this is basically the format. Okay, keep in mind that these are sections. These are not just items. Now, as Abdulaziz was saying, the first thing to do is to calculate the difference between current year and previous year. Now, remember, how do you calculate the difference? Do you start from current and then subtract previous, or the opposite? Do you start from previous and you subtract the current year? Actually, you cannot do it both ways. Only one way is correct. So you start from current, which is 2019, so 39,000, less previous year, 22,000, and you get 17,000. If the number that you get is positive, then it means it's an increase, of course. If the number is negative, it means there was a decrease. Okay? If you apply the same formula, so current minus, previous, then you will get the difference for each item. For example, there was an increase in equipment. Then here we have a decrease. This is also for equipment, but coming because of depreciation. There is an increase in accounts receivable, an increase in cash, and an increase in assets in total. Actually, the total we don't need. So we don't need to Abdulaziz, because minus 17 minus 11, okay, from math, follow me here, minus 17,000 minus 11,000. If you want to extract a number from the parentheses, you have to, okay, if we remove the parentheses, two minuses in a row become what? Yes, it's okay. Two minuses become a plus. Okay, so minus 17 plus 11 becomes minus 6. Yes. Never mind. You simply use your calculator. If you are unsure, simply type minus 17 minus 11. So two minuses. Don't forget about that. Okay, so I will apply the same formula for liabilities and equity. Here I have my plus 20, so there was an increase in share capital. You see, there was an increase from 80, it became 100. Here we have an increase in retained earnings. It was 17, it became 38. And here we have an increase in liabilities. It was 15, it became 20,000. Okay, this is important. Now, let's start with operating activity. And we will get back to these changes here. Do you remember what I said? And maybe it's a good idea if I take a snapshot and I remind you what was actually operating activity. This is a snapshot from the slide. Operating activity included most of the transactions that enter into the determination of net income. And I told you, most of the numbers that you find in an income statement belong to operating activity. For this reason, the starting point for operating activity is net income. Okay, net income. Net income, it's given in our case, or you can take it from income statement. This is why I told you that we need income statement. Net income is equal to 34,000. Now, the issue with net income is that not all numbers that we find in net income represent cash flow. For example, depreciation expense is part of income statement. It determines net income, but depreciation expense doesn't mean that we pay cash. If you remember, the adjusting entry for depreciation expense was depreciation expense debit and accumulated depreciation credit. Remember this? If you remember, you will understand that no cash is involved. So whenever we record depreciation, it's not that we are paying cash. So this is a non-cash transaction, okay? So let me put the steps for you. For operating section, follow these steps. 1. Start with net income. 2. Adjust net income for non-cash transactions. Example, depreciation expense. Okay? Now, let's go and do it. Then we will continue with more steps. Where do I find depreciation expense? If it is not given, like we have net income, dividends, etc., you may calculate it by the difference in accumulated depreciation between 2 years. So why did accumulated depreciation increase from 11,000 to 17,000? Because we recorded for 2019 a depreciation expense of 6,000. So the change in accumulated depreciation normally is equal to depreciation expense for 2019. So what do? I add depreciation expense. Where do I find depreciation expense? It is the difference between two accumulated depreciation for 2 years, 6,000. There is one more question that might linger in your minds. Why did I put it as plus 6,000? Here it is minus 6,000. Two ways I can explain it. First, depreciation is an expense. Okay, so it's an expense, meaning it's a negative item in income statement. So if I want to clear it away, if I want to remove it from income statement, I have to add it back. If you have some negative item and you want to remove it, you have to add the same number. So the effect will be 0. Since the depreciation expense is minus, you have to do a plus. There is one more way how you can determine if the numbers that you will put here will be minus or plus. And I want you to take note of this, because this is a general rule that we will apply not only for depreciation but for all assets, liabilities, and equity. Increase for assets will be counted as cash outflow. Okay, remember, if there is an increase in assets, you will count it as a cash outflow, as a minus for cash. Minus. But if there is a decrease assets, it will be counted as a cash inflow. Means a plus. Okay, for example, here this is a minus for assets, a decrease, technically speaking. It is counted as a plus for cash. The rule is the opposite when it comes to liabilities and equity. Increase for liabilities and for equity will be counted as a cash inflow. It's different. It's the opposite with of assets. So here, plus for liabilities and equity means also plus for cash. But decrease for liabilities and equity will be counted as a cash outflow, which means minus. In other words, in the first section where we have assets, you will change the sign. If it is plus here, we will put it as a minus. If it is minus here, you will put it as a plus. For liabilities and equity, you will take it as it is. If it is plus, you will put it as a plus. If it is a minus, you will put it as a minus. Okay? Understood? Guys? It's not difficult. Okay, it's more difficult to explain why, but I'm not going into that. I'm simply stating a rule here. So, this was the second step. We adjusted net income for non-cash transactions. In our case, we had depreciation. What is the third step? Adjust net income for change in current assets. For change in current assets. This is important. Now, when it comes to current assets, everything that we include in current assets, as we explained in the first part of the chapter in the statement of financial position. For example, accounts receivable, inventories, prepaid expenses, etc. Okay, now let's do it. These are all assets that we have. Can you identify the current assets? Can you tell me which of them are current assets? Any idea? Guys? So which is a current asset? Equipment, account receivable, or cash? It's not too many. Equipment is current. Remember, current means short term, less than 1 year. Duration, less than 1 year. Account receivable, says Reem. And what else? And cash also, for sure. So, account receivable and cash are current assets. But in this case, we will take only account receivable. Cash will be left for last. In the statement of financial position, the change in cash is the last thing we do. You see here, cash beginning, cash ending. So except for cash, you will take all other current assets, which for us is only account receivable. Now what happens with account receivable? Did they increase or decrease? As you can see here from the change that we calculated, they increase. So we have an increase in accounts receivable. But according to the rule, an increase for assets will be counted as what? Plus or minus? As a minus. So you will say here minus increase in accounts receivable, and you will put minus 3,000. Okay, so 3,000 will become minus 3,000. Okay, one more step. Number 4. It will be, sorry. Adjust net income for change in current liabilities. Okay, so once we finish with current assets, we will do the same for current liabilities. Example, accounts payable, salaries payable, unearned revenues, etc. So we will go now and we will find current liabilities. Here we have equity and liabilities. Which of these items is a liability and moreover a current liability? Yes, so it's accounts payable, Reem. Good. So this one here, accounts payable. What is the change? It's 5,000. It's an increase, if you notice. From 15 it became 20,000. Okay, increase in accounts payable. How should I include it here? As plus or minus? Yes, Reem, correct. So increase for liabilities will be counted as a cash inflow. So plus increase in accounts payable, 5,000. So 5,000 will still stay as 5,000, will not change the sign. Now, there is actually one more step, but in our particular exercise, it will not apply. Still, I will type it for you so you have it for other exercises. adjust net income for items or for transactions not belonging to operating activity. What I mean by this, sometimes in income statement you have gains or losses, for example, from sale of equipment, right? You remember this from income, from financial position statement, sorry, from income statement, chapter 4. Gain or loss from sale of equipment, gain or loss from sale of a division. Yes, these technically are similar to revenues and expenses, but they come from purchase or sale of non-current assets, which I explained you. These are part of investing activity, not operating. So if there is any gain or loss from sale of equipment, from sale of buildings, land, etc., you have to remove it from net income. And you will do it by doing the opposite. If it is a gain, you will subtract. If it is a loss, you will add back. Anyway, hopefully we will do more exercises and I will have a chance to demonstrate it to you. Right now we will stop here. So equals net cash from operating activities. Okay, so once we have done all these adjustments, we calculate the net cash from operating activity, which is basically the total of all the numbers that we included, 42,000. Okay, now we used accounts receivable. Okay, I will highlight them. We used also accounts payable. Little by little, we will use all the items. We will use equipment, we will use cash, share capital, retained earnings. Also, I forgot, we used also the accumulated depreciation, by the way, because we calculated the depreciation expense. Why is it 42? It should be 39. Okay, let me check. 34 plus 6 equals 40. 40 less 3, 38. 37, sorry. Plus 5, 42. Maybe you did minus here? No. What did you do? Did you do minus for this? No. So how did you calculate 39 now one? Show me the numbers. So 34 plus 6 minus 3 plus 5. Okay. Okay, careful about the numbers. It's very important, okay, what we said. If the change is in assets, it will change sign here. If the change is in liabilities and equity, it will be the same. No, it's 42. Yes, Abdulaziz, it's easy. Equals 34,000 plus 6,000 minus 3,000 plus 5,000. Okay? If I press enter, Excel will calculate the result for me. It's 42. No. Yes, minus, you put minus twice? No. Only once now. Okay. Now, I will not start with investing activity because it will take some time. Or actually, no, it will not take so much time. We have 7 minutes left. I can finish in 5 because it's not, actually, the operating activity is the hardest one. The other sections are easy: investing activity and financing activity. Okay, so I will do investing and we will leave financing for next time. Okay, so let me remind you what we included in investing activity. Investing activity basically meant or included transactions involving non-current assets. You see here, non-current assets. If there was a purchase or a sale of non-current assets, then it is investing activity. So for investing activity, we have to look at non-current assets. Now, which of these items are non-current assets? Equipment. Okay, equipment is a non-current asset. So what happened to equipment? From the numbers, we can see that there was an increase. Now, you could say increase in equipment, but we have some information and we could be more specific. Yes, Abdulaziz, you are correct. You see this piece of information here? New equipment was purchased and none was sold. So this increase in equipment numbers is because the company purchased more equipment during 2019. So you could say increase in equipment, or you could say purchase of equipment. Okay? And as Abdulaziz noticed, we have to use a minus here because increase for assets means minus for cash. Minus 17. And it makes sense because what happens when you purchase equipment? You pay cash or you receive cash? You get cash. You pay. So it's logical. If you increase your equipment, then you will use up your cash. And in general, generally speaking, if you want to increase your assets, you have to pay for them. So this is why increase for assets in general is counted as a cash outflow. And decrease in assets, okay, you can think of sales, for example. If you sell an asset, you will get cash. So it will be counted as a cash inflow. Now, there is no other non-current asset, so this is the only item. And we can calculate net cash from investing activities, which is the same, minus 17. Okay, now don't expect the result to be positive. No, it will depend on the numbers that you include. It might be positive, it might be negative, like in this case. So what is the meaning of this? It means that during 2019, 42,000 cash was received or collected from operating activities, from normal activities, daily. But $17,000 were paid, were used for investing. So we purchased some equipment in this case. Now, I will stop here. Financing activity I will do next time, and we will complete the statement with the remaining steps. Okay, so what do you think so far? How does it look? How do you like it? Is it nice? Is it interesting? Is it difficult? What are your thoughts? Kind of easy? Interesting? Between? Okay, good. Okay, now I will try to do more exercises, especially next time, and also some of these exercises I will post for you in Moodle. Okay, so you can review them from home. Good. So that's all for today, guys. Thank you very much. If you need, you can stay for questions and answers. Otherwise, have a nice day and a nice weekend ahead, and see you next week. Don't forget, I will post later your next assignment. It will be individual. And the days, the number of days will start counting from Sunday. sorry, not from Sunday, from Saturday. From Saturday. My bad. From Saturday till Wednesday. Okay, thank you very much. No, not yet. Chapter 5, part 2 is not on Moodle. I will put it on Moodle for you. Okay, as we finish, I will put it. Thank you very much.